Folks, I'm going to be completely real with you right now. As you've been sitting at home watching TikTok, there's been an absolutely seismic shift. There are people who are paying attention right now who have already made money from these stocks. We are 4 days away from February 1st, 2026, and if you're not paying attention to what's happening in the market right now, you're going to be left behind. I'm talking about 5 stocks that have catalysts so powerful, so immediate, that waiting even a week could mean you miss out on gains that could literally change your portfolio. We're talking about stocks with concrete events happening in the next few weeks that could send them to the moon. Each of these players are highly relevant, big players in their field, are set up to blow up in 2026, especially by February 1st, have massive growth potential, have significant upcoming catalysts, and in my opinion, are top key plays. I'm going to make the case for each of these and you be the judge. Now folks, if you're new to the channel, welcome. We cover stocks, stock news, and economic data here. My goal is simple, and that is to provide straight and to the point simplified videos for you to help you get to the next level on your stock market journey. All I ask in return is that you hit that beautiful like button and hit that ravishing notification bell as well. Let's get into it. So before we get into it, folks, we got to go over a market update. So last week, the market had a volatile but ultimately flat week. Investors shook off concerns about another potential government shutdown and geopolitical uncertainty. We saw modest gains on Monday, followed by choppy trading throughout the rest of the week. We got the S&P and Dow Jones slightly down, NASDAQ about flat, and we saw China had H2O chip news that saw Nvidia rally. Nvidia climbed 1.5% Friday as China told tech firms they can prepare orders for the H200 AI chips, easing concerns about access to the Chinese market. Now for this week, we have a Federal Reserve meeting starting today. We have a decision announcement tomorrow. We'll see what happens with that. Scott Bessent also said that as soon as next week, there could be an announcement for the next Fed chair, which is going to be extremely important. You also have a looming threat now of criminal investigation into current chair Jerome Powell for not lowering rates enough. Make your own determination on that, folks. I'm personally not so sure about that one. But folks, we have to go into these 5 stocks we need to buy immediately before we head into February 2026. This is going to be a heavy breakdown on what we got for this video. However, as always, this is not financial advice. Don't do the frisky unless you're willing to take that risky. All right, let's get into it. So stock number 5, we have Taiwan Semiconductor, TSM. This is the quiet giant. This is the stock that nobody is talking about loudly enough. While everyone's focused on Nvidia, etc., Taiwan Semiconductor is sitting there as an actual manufacturer of almost every AI chip in existence. So here's why this is a no-brainer right now. Well, TMC just reported earnings on January 15th, and the results were stunning. Q4 revenue rose 26% year over year, but here's the kicker, folks. They guided for revenue growth of nearly 30% in 2026, and it gets better. They're now projecting a 25% compound annual growth rate from 2024 to 2029. And so for a company of TMC's size, that basically is unprecedented. We have some catalysts to talk about. So Morningstar just raised their fair value estimate to $428 per share, a 38% increase in price target, calling for the stock being extremely undervalued at current levels. The company is accelerating its Arizona FOB with production now targeted for 2027 instead of 2028. Gross margins expanded, and they have a 70% market share in foundries, basically a monopoly on advanced chip manufacturing. The bull case, folks, is probably the simplest bull case on this list. The AI chips have to be manufactured somewhere, and TSMC is where they're manufactured. So Apple, Nvidia, and Qualcomm, they all use TSMC. The company has a 70% market share and technical moat being insane. It takes billions of years to build a competing foundry at their scale. Customers are falling over themselves to get capacity. They literally can't build fast enough to meet demand. And unlike pure play chip designers, TSMC has pricing power because there's no viable alternative at scale. Currently trading around the $340 range, so we could see it go up massively from here, folks. Stock number 4, we have Nvidia. This is the AI kingmaker. The current price is $189. We gotta talk about Nvidia, especially coming up after Taiwan Semiconductor. Now, I know what you're thinking. Everyone knows about Nvidia. Everyone knows it's the giant, the GOAT, the big player, etc. Well, number 1, a lot of people still don't realize how big of a player it actually is. And number 2, we have some big updates with this stock. Here's the big deal. Nvidia reports earnings on February 25th, but before that, we're getting a series of bellwether reports from their biggest customers that could send this stock flying. Why is it trending right now? Well, Nvidia's manufacturer, Taiwan Semiconductor, as a continuation from that, just reported earnings on January 15th and guided 30% revenue growth in 2026, as we mentioned. That is insane for a company like that, and they literally said that AI chip demand is accelerating and they can't manufacture fast enough. So from now until early February, we're going to see Nvidia's biggest customers give reports on earnings. Microsoft, AMD, Alphabet, Meta, and TSMC, which already reported earnings, which were very bullish. Every single one of these reports, folks, is going to give us a preview of what Nvidia's quarter looks like, and it's likely going to be very positive. We also have recent news from China. China just reopened Nvidia's H200 chips. We're talking about potential orders for over 2 million units at 27,000 each. That's $54 billion of potential revenue from China alone in 2026. So you got to get in now. The company has a backlog of $275 billion in unshipped products based on 2026 demand estimates. The bull case, folks, is very simple. Nvidia has a $500 billion book order for 2025-2026 that they haven't even fulfilled yet. AI infrastructure spending is projected to go from $600 billion in 2025 to between $3 to $4 trillion by 2030. That is insane, folks. The bear case, there's risk that AI spending could slow if companies don't see ROI quickly enough. Chinese customs officials recently blocked some H200 chip shipments, creating uncertainty, and there's always the threat of competitors like AMD and custom chip makers eating into their margins. Currently trading at 190, folks. Price targets, Wall Street consensus has a $250 per share. High target from Evercore is $352 per share. That's 86% upside. Again, some go to 500. We're going to see about that one. That analyst specifically said that Nvidia's revenue growth could jump 80% by mid-2026. Basically, folks, between now and February, we're going to get earnings reports from all of Nvidia's major customers, Microsoft, Alphabet, Meta, and AMD. If they all report blowout earnings, adding on to TSMC, and raise AI spending guidance, Nvidia stock is going to gap up hard before their earnings. So you definitely want to be positioned before that happens. Stock number 3, we have Meta Platforms. Meta is one of the most misunderstood stocks in the market right now. The stock has pulled back 18% since its third quarter earnings, and Wall Street is worried about their massive AI spending. But here's what they're missing, folks. It is trending right now because Meta's earnings are coming up in early February. The setup is perfect. The stock got beaten down on concerns about capital expenditure. They spent $70 to $72 billion in 2025 on AI infrastructure, and that number is going up in 2026. But here's the thing. That spending is already starting to pay off. We have some recent catalysts here, folks. Bank of America reiterated a buy rating with a $900 price target, citing Meta's massive user base and AI integration potential. We also saw a $920 price target and expecting a sentiment reversal in 2026 as AI execution improves. Median analyst price target is $832 per share, high target $1,200 per share, and consensus rating is a strong buy from 41 analysts. Currently trading around $670 here, folks, so that's really good if it can go up to $920 or even $1,200 or even higher than that. The company generates $190 billion in trailing 12-month revenue with a 31% profit margin. They are absolutely printing money right now. The bull case, folks, is that Meta has 4 of the 6 most popular social media platforms on Earth. Their advertising business is a cash-generating machine. Bear case, folks, is that they have a Reality Labs division that is burning $4 billion plus per quarter. That is really nothing for Meta, though, and their capital expenditure is massive, and there's no guarantee AI spending will generate proportional returns. Some people are very bullish, some people are bearish. You could be your own judge. They also face regulatory pressure and the risk of user growth stagnation. The valuation is 29 times forward earnings. That's not cheap for a company with these concerns, but it is what it is. Stock number 2, we have Wayfair. This is the tariff comeback play, and now we're getting into the aggressive plays here, folks. Wayfair is a stock that got absolutely demolished in 2025 on tariff concerns, and now it's positioned for a massive comeback. The setup here is very interesting. So on December 31st, 2025, the White House delayed tariff increases on furniture, cabinets, and vanities for another year. Wayfair exploded on January 6th, up 6.5%. The stock has since consolidated, and the setup here is powerful. Here's the thing. Trump's tariff policy has created what traders call the taco trade. Trump always chickens out. Trump loves tacos because sometimes Trump always chickens out. Get it? So he threatened massive tariffs. The market freaked out. Then he backed down, and previously beaten down stocks ripped higher. And this is exactly what's happening with Wayfair. So why does this matter right now? Well, Wayfair reports earnings on February 19th. That's 3 weeks away. The company is coming off a strong Q3 earnings while revenue grew 8.1% year over year, and they're projecting $420 million in free cash flow for 2026. Compared that to negative $1.1 billion cash burn in 2022, massive turnaround, folks. Wayfair could be the stock of the century, actually. We got recent catalysts. Morgan Stanley just raised their price target to 140 on January 15th, citing improving fundamentals. Currently trading around 110, so this is huge. Barclays upgraded the stock to overweight on January 7th. Active customers grew sequentially for the first time in years. So the bull case here, folks, is that this industry was bracing for disaster with Trump threatening 50% tariffs on furniture. Now, this is off the table now for at least a year, maybe longer, given Trump's pattern of backing down. This gives Wayfair breathing room to continue their margin improvement story. The company's fundamentals are actually strong. They're growing revenue while improving margins and generating positive cash flow. They are 100% the dominant online furniture player right now at massive scale advantages. Plus, a major bull case here, folks, tax refunds will hit in February and March. Historically, consumers spend tax refunds on big ticket items like furniture. With tariff concerns now off the table, this could be a perfect tailwind for Wayfair. Now, the bear case, some folks are concerned about the reliance on consumer spending. We got unemployment hovering around 4.4 to 4.5%. We got moderate hiring, low layoffs, a shift toward employment stability, but nothing crazy. If the economy weakens, furniture is one of the first discretionary purchases that gets cut. In addition, Trump could change his mind again and reinstate tariffs. His policy has been unpredictable, folks. The market doesn't like that, but we do have some good price targets here, folks. The high target is $145 per share. Consensus rating is a buy from 25 analysts, and Morgan Stanley's new target is again $140 per share. That's 33% upside. Okay, one more thing to mention on Wayfair, folks. This is a taco trade. If you believe in the taco thesis, he may back down further on tariffs. He also definitely will not reinstate the furniture tariffs. And if you believe this taco philosophy, this is an absolutely monster stock worth looking at. I don't usually mention furniture stocks, but this one's a banger. So if you want to be positioned before their earnings report drops, folks, that's in February, especially with the Morgan Stanley and Barclays updates providing momentum, this could be a very, very good play. And finally, folks, stock number one, we have USAR. This is the USA Rare Earths company, an absolutely massive player in the rare earths field, which is absolutely popping off right now. USAR is a US-based rare earth elements and permanent magnet company building a domestic mine-to-magnet supply chain. They do all this from extracting heavy rare earths, like at its Texas Round Top project, to produce magnets used in defense, EVs, and electronics. Recently, the Trump administration agreed to a roughly $1.6 billion funding and equity package that gives the US government a meaningful stake, about 10%, and the US government is now trying to use USAR as part of a strategic push to counter China's dominance in critical materials. The deal pairs federal funding and loans with a large private placement, and shares jumped on this news. This could be an absolutely massive play for 2026, folks. It is currently trading around $25, $25.53 to be exact. Price targets, well, we got significant financing news and a surge in prices, so this is going to continue. We have a high estimate of up to $45. I've seen price targets higher than that, actually. Low estimate $15 to $16 with a consensus of buy or outperform, generally speaking. The bull case, the bulls point to a massive US policy backing, the strategic importance of rare earths, the company's integrated production roadmap, and strong demand from defense and clean energy sectors. And each of these catalysts could drive outsized growth as the business scales. The bear case, folks, well, the bears point to execution and capital intensity risks, questionable production timelines, valuations which could be stretched, and broader rare earth sector sentiment is cyclical and can swing hard based on macro or trade developments. But I still think that USAR is a massive play. All right, folks, that's all for now. I hope you enjoyed this video, and if you did, make sure to hit that beautiful like button and that ravishing notification bell as well. Subscribe for more content. We try to give you value here on this channel. Stay safe out there, traders, and I will see you in the next video.